What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Thursday, February 2nd, 2023. We're going to start here with the balance update. I was off yesterday. I don't trade FOMC. Without any trading, it didn't really feel like there was anything to talk about. We could have discussed what Powell said. I did watch the FOMC meeting, and I did watch some of the chart. But really not looking at what, really not focused, not really looking on at trading. It's become my experience that FOMC is just a nightmare of a day. You have some really volatile moves that really affect premiums very badly. And so I don't trade FOMC. That's just how it goes. So coming in this morning, though, we also had some stuff from news from the Bank of England and the European Central Bank raising 50 basis points each, continuing to hammer their interest rates up, making the euro stronger, making the dollar weaker. So it was no surprise to me that we were going to get a rally today in the market. But that being said, I am of the slight opinion that our parabolic move is running out of parabolic. It is getting up there. We'll go into that today. I did place 3 trades today, and we'll talk about those 3 trades. We're going to review what happened, the intraday charts, 1 and 5 minute charts of the price action for today. Go over and look at where I placed my trades, what worked, what didn't work. You can see from the balance on your screen, the balance is up, and you can see that my positive today for $105. So it's a good day trading for me. Not great. I'm trying to make this be 125 if I can, but for the most part, that's not the focus of this. That's really not the focus of the videos I do here, or the focus I believe that you have to have in order to become a professional trader. So now that all being said, some things to keep in mind while watching any of my videos or watching my live streams. One, I am not a professional trader. You can see from the small balance, I do not get paid to do this. Nobody is really asking my opinion, okay? And you should not be. I am not a trading teacher, guru. This is not a point to become this. This is a chronicle of my journey. I need to be very careful about this. The only thing I can really help you out with is some vocabulary terms that I learn, and I can teach you as I learn the terms. But as far as trading goes, this is that's not really something that you should be watching me trying to emulate most of anything that I'm doing. Okay, next thing that we need to go over. On any given day that I do one of these posts, first of all, you should treat this as though you're watching a student give you a book report on the market, how they traded, around things. You need to, that is what I'm trying to be here, as an absolute student. This is simply a report of what I did, my thinking, all of those things, following my setups. Okay. That was what this is. Now, all of that being said, all of those things that being said, as far as that goes, some business I want to take care of from earlier this week. I do want to build these on each other a little bit. I started out the week really with a mindset that wanted to be disciplined, wanted to focus on discipline, wanted discipline to be the goal, okay, of this thing. That being said, suffered some big hits on Monday, came in on Tuesday, traded much better on Tuesday. Even though I suffered a red day on Tuesday, it was a good red day. And I've reached the point that as I go into these videos, they really need to begin with one of 3 things. The first one is I respected my setup. We made money. 2, I respected my setup and we stopped out of the setup. That stop out can be for a profit. It could be for a loss, but we stopped out of the trade. And lastly, the last thing that we look to say is there was no trade. Okay. The setup didn't present itself, no buy signal, no sell signal. So those are the 3 things. Now, today I'm happy to report to you that it was a mixed bag for me today. I traded, and the first 2 trades I took today, I respected my risk. I lost. I was red on those trades. The third trade setup came to me today. I took it, and it was a very green trade for me, put me green on the day, and getting pretty close to being green on the week. Okay, so that's this week as far as how it goes. Again, you can see the balance. I am going to be very careful not to share these balances with you guys on a daily basis. Okay, this is not something I want to do. Part of the reason I'm showing this one today is simply it is the beginning of the month, and I want to be able to sort of have a number as far as where things are at relative to my performance. So I'm not going to be showing these. Wins are not that important. The amount of money you make in a trade is not really that important. What is important is respecting the setup and respecting the risk. And if I'm not doing those things, then I'm there's something wrong with the trade. This number could be anything. You could put 2 zeros behind it. You could put you could knock a zero off it. You could, and it wouldn't matter. Respecting a trade setup is respecting a trade setup, and it's ultimately the goal. Now, one of the other things I want to reiterate, and this is something that, if I've been talking to this guy named Nick on via Twitter and some of the comments and stuff like that. Tuesday, I came out and was adamant. I was ecstatic. I was very happy that I had respected my risk, even though I had a red day. It was a good red day. It was small risks. And I felt as though I had really had something knocked loose in me because Friday was really a frustrating bad day. Monday, in spite of how focused I was on discipline being my goal, still made a bad trade. And then Tuesday came in, traded well, respected the risk. The trades didn't work out. That was fine for Tuesday. And I felt very good about that. Something Nick did point out to me was the idea that I came out, was very excited in the video. I had a lot of passion for sort of what had happened, what had transpired. And Nick wanted to point out that that's good that you recognize those things. He pointed this and that. But they're also very, very fresh in your mind that you still haven't figured out the thing that is making me I still haven't figured out the thing that is making me take a bad trade or deviate from a trade. Give me 1 second, guys. So either I haven't figured out what is either making me not respect my risk, what is making me not respect my setup, what is not letting me do some of these things. Now, and what is it, the thing that I'm feeling? And I touched on this a little bit on Tuesday's show, but I really wanted to reiterate this after kind of mulling over what he said, because he's absolutely right. And there's a bit of the habit. One of the big core pieces of this is two things. One, really wanting to come here on this channel and tell you that I made money, that my balance is growing, that I've turned some type of corner. And when I have small red days, they start out as small losses. I have these small losses that I take these small losses and I think, well, I can get that back. I think I can make that plus more. I can do better, right? And then I can go to the YouTube people and tell them I've been successful, right? I was green, I took this trade and it worked, and And where I'm combating that from is there's areas where I find that I have these pressures and I cave to these pressures eventually relative to what the behavior is supposed to be for my trading. Okay. And what happens there is the thing that I find that's best as of right now is to do things that eliminate those pressures. So the very first things that I have done, and this is again continuing for me to be a refining process. The very first thing was recognizing not trading in the first hour, not trading in the last hour. Okay. And along with that came some very good technical reasons for not doing those things. The very first thing that happened in the first hour is when you wake up in the morning, and especially because the futures have typically moved a lot in the pre-market, your premium values are all over the board. They're all over the place. Okay. Options that are 5 strikes out because of implied volatility may be a lot of money right at the open of the bell, but after that first hour, those premiums get crushed. Okay. The second thing is going to the last hour of the day. You're running a race against time in there in the last hour of trading, and any false move, even if it's a fake move, right? Let's say you're long into a trade, the market's going up, and you get a corrective couple candles to the downside, and you're long into this thing. Those couple of corrective candles can pull all of the wind out of the extrinsic or even intrinsic value of your contract, because it removes elements of time. Okay. So I found that one part of the reason, even though those pressures were there, I didn't feel those pressures are there, but what was really causing those to be crippling was that those on either end of the day really mess with the premium and the trading based around that premium. And it becomes really hard to predict. Now, I know a lot of guys that the first hour and the last hour are their favorite times to trade. They do very well in those times. That they enjoy that. I have not been successful with that. So the second thing that I think is I most of the time, I would say 80% of the time, have no problem respecting my setup, looking for the setup. I don't want to just gamble, right? I really want to be confident that the trade I'm taking is going to make me money. It's going to work. I don't want to take trades that are the stuff, right? But what does happen is I see things and I begin to predict. I begin to try and imagine if the market did that, right? And the problem with this is it keeps the price action from it makes you now biased. You're not objective. You're not staying objective, or I'm not staying objective in that. And especially around these areas where I feel pressure. So what I've really trying to lean into, especially into these videos, is that idea of what I've said here is that there's 3 things that are acceptable for me to come on here and tell you. 1, I respected, my setup worked and we made money. 2, I respected my risk and we stopped out of the trade, either for a loss, either for a gain. Okay. Believe it or not, I stopped out of this trade, the last trade of the day that put me green on the day. It was a green trade. I was green, but I stopped out still. Okay. It was a good stop out and I'm very happy I did, but I'll tell you it was a stop out. Or the last one is I didn't have a setup and I simply didn't trade. Okay. And again, that's something you could look at from yesterday's, it's the Fed speaks. There's no setup there. As far as I'm concerned, gambling based on these guys are gambling based on what Powell says. And you can scroll through Twitter and find a list of angry put buyers yesterday that were sure Powell was going to be able to crash the market. Okay. So, and that's a gamble. And I've done that before. And even furthermore, I did think yesterday we would go up, and we did go up, and I probably could have made money. But what I will tell you is that for every 10 times that Powell speaks, I might be right one of those times. I have never made money trading FOMC. And even when I did, like I think it was 2 FOMCs ago, I finally figured this out, is where I kind of had this aha moment where I knew we were going to go down. We were up. Price was around 405. I bought a $400 strike on, or about a $395 strike on SPY, caught the move all the way and from 405 all the way down to like 397, 398. And I was only green $100 on that move. And I thought, and the call and the put, it cost a lot of money, especially because I bought it. It was multiple days out, and we caught a bounce off of that and never made it back to 405. It went back up to 401. And within that bounce, the $100 that I was green on that one contract, it was lost and I was red. And I said, well, it's going to keep going down. So I held it overnight, and between theta and the slow grind down into the morning, I still was only, when I sold the position, I was still only green $100. So essentially I held for 2 moves and wound up making the same money twice. Right. And the first time I didn't even get to keep that money. I could have traded twice off of that and made twice that much money, but there's a lot of things I wasn't aware of. So even then, FOMC, the one time I've made any money as a result of trading in and around FOMC, I haven't done well. And so the thing that I would say is, for me, that I've learned about that is that even if I'm right, 1 out of, they talk 4 times a year. If I'm right 1 out of 4 of those times, in that I've picked the correct thing that he's going to say, and I've picked the correct direction of the market, I still only maybe get paid. And it's not all the other FOMCs that I have lost money on. All of the other FOMC meetings that I have lost money on, none of my winnings have ever added up to more than what I've lost trading FOMC. So I just don't do it. I look at other professional traders that they don't trade FOMC. They're hands off. They're like, you can have it. If you get it, if you got it figured out, go right ahead. But if you're those guys, and now if you're me, that's it. Now but where I want to end this little segment of the show is the last sort of thing, and that's, again, where the battle happens here is in the pressure to come here and demonstrate this to you. Okay, I feel this pressure. When I'm trading, I want to be able to come here and on this show and put up win after win after win after win. I want you to believe that I know what I'm doing. And that is a complete and utter lack of humility on my part. And the other thing about that is it is something where I do not I have been negligible in respecting the trading process. The trading process has 3 results, and the 3 results are what I've said and what I will say one last time here, and then we'll move on to the next thing. Our 3 results are: I respected the setup and made money. I respected my setup and I respected my risk, and I stopped out. The trade setup never came. I didn't trade. Okay. These are the 3 things that are acceptable for me to come here and say. What I should want to come here and tell you is any one of those 3 outcomes. Okay. And that is what should be here. Okay. If you go into today's trading setup, today's trading, when we go look at the trade, you will see. I'll show you what we did as far as trading. We're going to look at the chart intraday and go over this. Okay, I'm going to get rid of that. Okay, up behind me. Here we go. Bring up the charts. Okay, I'm going to go ahead and take the Bollinger Bands off, and I'm going to even take the moving averages off for right now. Intraday. You are looking at a 1-minute chart of the SPY or Spider. Okay, 1-minute chart of the SPY or Spider, the S&P 500. This is a cash equivalent of the S&P 500. As you can see, now this is a very interesting day. You wake up in the morning. Yesterday's closed down here, and we gap up early in the morning. Okay, one thing, and this is something I'm going to reiterate from Shadow Trader, is a gap is considered filled. This is in the gap rules. I recommend you go to Shadow Trader and read the gap rules, talk to and look over the gap rules. I think this is something that confuses. It confused me as a long time, and it really screwed me a long time as a trader. There are a bunch of guys holding short here, hoping to get back to this 410 number. Okay, a gap is considered closed when it reaches on from the daily time frame, when it reaches the high in a gap up. A gap is considered closed, especially on a daily chart, if you come back and touch the high of the previous day. Okay, so you've made a connection with the high of the previous day. Okay, so going into today's price action, you come back, you test the high from yesterday, and you get this explosive move to the upside. Now, my first instinct is I did not trade this here. And a lot of this all was, by the time the end of the first hour was happening, this move was already underway, and I was not willing to try and chase this market right here. Okay. So my first trade coming into the morning is actually a short trade. Now, part of the reason is that up here into this 415, 416 level right in here, coming into that level, you're reaching, as far as the upper Bollinger Band goes on the daily time frame, you're reaching a pretty critical resistance point. As far as how far the market can really travel within a day, the market tends to want to try and stay inside of that Bollinger Band, especially as it's relative to some of the larger time frames like the dailies. Okay, so I was looking for a scalp trade to the short side, and coming into here, you got in here, you got this retest of this breakout of this resistance area right here, and as you got the rejection from on the slow stochastic from here, I went short into this. Unfortunately, what wound up happening here is my short entry came in a little bit behind, so I got in kind of in the middle of this move down. And you can see, even though we were grinding down here, because there was so much buying pressure and there's a lot of sort of green candles kind of in all of this, what happened is it did keep the put option from actually really making a move and printing anything. And what I did wind up doing is stopping out of that trade when we came back up as we came back up, you can see here, you created this sort of swing low spot right where my finger is. And as we came back up into it, I did stop out of the trade. I took about a 4-cent hit on that, which is about $40 onto that move. Okay. God, that was killing me. Okay, so the next thing that happens here is you get up and you get this sort of double bottom situation, these tests of these two swing lows. And I missed this move right up here, okay? And what winds up happening, I got to adjust this a little bit. What winds up happening here is you get this test here of these swing lows, and you come down and where the slow stochastic started coming out of overbought, I went into this and we got up, and then there was a pullback immediately. Now at this point, we're trading in at about the 416.5 level. I'm trading the 420 SPY contracts as a matter of risk, and I'm trading the 420 contracts as a matter of risk, as far as like how much premium I'm willing to afford on days like today. And what happens here is those 420 contracts, they make a very small, like 3-4 cent move up. And this pullback right here into those here actually comes back. I'm in them at around 20 cents. And then I wind up out of them. It pulls all the way back to around 16 cents. And I unfortunately stop out below the previous swing low on the contracts. I don't have those those options. I don't have those charts for you today. I do have snapshots of them, but I didn't bring them in today's show. Okay, so again, this puts me down about another. So I'm about $80 down on the day, and really kind of a bit of frustration into this move here. So you can see comes back, pulls back down here. Now the thing is that this little move up here correlates some really small movement on the low side. What's up, Patrick Frizze? I see you in the comment section. Anyway, and you get this sort of this bounce right here. And I got long again. And it was there that I noticed the one mistake that I had made is I'm trading contracts that are way too far out of the money. And so I did switch over. I did switch over to, we're in and around coming into the 417 level. So I went to the 419 contracts, and I put that position on, and I managed to catch this whole move up here. I'm in them at about 53 cents. We make the push all the way up into 80 cents for those contracts in the move above 418. For me, this is about a $250 win where I'm at with it. And so with my losses today, and so I wind up stopping. Anyway, when we start breaking above here, I move the stop loss to capture about $200 worth of profit. And you can see from there, and this is not exact math, the exact numbers, but I did stop out here, sold them. I was in at 53 and I sold out at 73 for the last one. Was very clear on that. The thing that's crazy, and this is where, like, again, starting to, respect your stop losses, respect even your trailing stop. You can see from there, we're in here, it pulls back, stops me out at a $200 gain, and then just plummets. Okay. And I mean, this whole move right here burned a lot of contracts, and it burned a lot of premium. And especially because they did it right here. And this is about the last hour of trading, was this move to the upside. But now, because of this move, they've eaten all your time off the clock. They've taken away, they've burned your theta completely. And it is very interesting here that to see that. Now, it would have been a great short trade. I had tried being short before, and we are getting late in the end of the day. I do kind of regret. I don't regret it, but it would have been cool to have gone long and then turned around and flipped short. That would have been pretty awesome. That would have been pretty dope. But the risk isn't there, right, for a short trade, because you've got all of this as potential support. And for a second, they were able to catch them, right? And then they turned around, they've come right back up into testing that support zone again, or that zone right there again. So that is very interesting as far as like the chart action and the behavior of the chart today and how I traded. I feel very good about respecting my risk. It would have been a small loss day, about an $80 loss, turned into about a $100 profit. It might have been more like $100 loss, and because I know that was a $200 gain, so it was about 95 loss on this. And there is some of it that's a wiggle room with where you get filled. It's not where you get filled. There is some type of slippage when you're trading contracts with Webull. They pad things a little bit because the commissions are inside of your they are inside of the trade. It's just there's no direct commission charge when you trade with a commission-free broker. They do get paid. So do not fool yourself into thinking that these guys are doing this out of the good of their heart. Okay. Now, few things to talk about before we go over this. One, we got Apple earnings tonight, and we've got Apple and Amazon today. We still got Google coming up. So with the banks all cleared, we have the central banks have all done their thing. We have Apple, Amazon, Google, the big tech guys. Anybody who is expecting to see whether or not this thing turns back into the bear market or whether it continues, it will probably be based on that. Now, I don't know what those earnings are. I'm not really paying attention to them. I am really sort of practicing the art of not chasing so much news and economic data. But it can't hurt to look here. I bet this should tell you. Yeah, I bet Apple was a huge disappointment. Let's go over and see what Apple did. Ooh, Apple must have delivered a miss. Let's see. Apple slumps on earnings miss. Okay. Now that's crazy because it's only down like $4 in the after hours, so not a huge terrible thing. It's going to determine their guidance. I don't think you'll really see much moves based on guidance. All right, so that's cool. 45. I really wanted to swing puts on this. And I told myself that is gambling, and I don't want to gamble. I refuse to gamble. Okay. All right. So that's Apple's chart up behind me. I don't trade this. I've traded on Apple. I've made money trading contracts on Apple. Normally, two tickers. I'm usually never short. I've never bought puts on Apple. And I've never bought puts on Tesla. As a matter of fact, I've never even traded Tesla. I don't like trading Tesla. So anyway, as far as all that goes, that is pretty much going to do it for me. Again, going into tomorrow, no real big expectations. If I look at our daily time frame, okay, there's a couple things here that I want to point out a couple of things really fast, actually, before we go. Okay, the first thing we want to do is go to the weekly time frame. I need to put on my indicators. And you want to look at the Bollinger Bands. Okay. Bollinger Bands are a lot of things, but the simply put, they're usually a measure of what are called standard deviations. And the top one and the bottom one from the middle are two deviations, standard deviations from the middle. Now, what exactly is a standard deviation? I don't know. I have Googled this. I have looked up. I don't quite understand the concept of standard deviations. What's the standard, and how far does it have to deviate for it to be deviated from the standard? On the weekly time frame, here's some stuff that I want you to see. First of all, every single time we have gotten two standard deviations off the bottom, okay, stocks tend to get bought. They're considered extremely oversold. Again, you can see you got down here. You made it almost back to the mean. You got, especially on a weekly time frame. Here again, you get up there. Every time you get down here around one of these Bollinger Bands, you get a sort of snap reaction back in the other direction. Here, you're at the upper Bollinger Band. So the idea here that you should really be buying at this point with the bands where they are off the standard deviations, I would not want to do that. I would expect there to be some massive profit taking. Now, that being, and hold on, I'm going to even go back here because this is something that I haven't really looked at, and I want to, and this is stuff that I'm thinking about. So we go back to the bull run before, okay? And if you look at this, it does stay up against this band into this bull run from the last couple of years, but it usually comes back with inside of this at some point, right? It comes off of that, right? So I want to be very, very careful, I think, to make sure that I'm not buying against the band, that I'm waiting for the pullback into some of this other stuff. If I'm looking to go long, there's a lot of opportunity to go long here. But, if you look at the bottom side of the channel, that's really your best practice there as far as this. And it does eventually at some point here, you come back to the mean. Here you almost reverted to the mean. Here you reverted to the mean. Here you reverted to the mean. So there are points where it does eventually revert to the mean to some degree or another. So there is a little bit of this that I want to be careful that I'm not placing my call purchases if I'm going long on this against that upper band too much. And again, same thing here, really coming into an overbought. So I definitely would say I'm looking for a pullback type scenario to happen into this high or back into the 18-week moving average here at some point, would still create in this a higher low type scenario. So as far as trading with the trend goes, Cosmic something. Hey, what's up, Cosmic? Groot Gaming. Hey, welcome to the show. I'm about to wrap up, so sorry. That's pretty cool. Anyway, so again, you can see that if you are placing your call options for zero DTEs, that I would believe that a person would want to make sure they're not against that upper Bollinger Band buying those. You want to wait till the bottom of the candle is at least off of there a little bit. Anyway, that is going to do it for me. You can see obviously you're in an uptrend. You're over the 18-day. Yeah, you should be confused. You're kind of late into the show. Sorry. Hit me up. I'll or watch from the beginning. Anyway, I'm going to wrap this up. If you want to chat with me, Cosmic, hit me up. Well, I'll talk to you more about the crazy stuff that I'm trying to do here. Anyway, Russell Journal is written, edited, hosted by me, Russell Lists. We're produced by Social Media Shows. Our executive producer is Maria Pereza. Thanks for checking out the show today. Go ahead if you again, this is just a book report on what I did as far as trading goes, how I'm interpreting the market. I'm not a teacher. I'm just a student, and so I'm basically giving you a report of what I've either learned or what I'm working on or how that's going. It's not educational at all. So if you are a good trader, you've got practice trading, feel free to grade my book report. Leave a comment in the comment section, A through F, how I did as far as my interpretation of the market went, how some of my trading goes. Happy to chat with anybody about that. And I just want to get better at trading. That's the dream. So until tomorrow, though, guys, just pretend I said some sort of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget our very own Merrill and Marek comedy show. This fun, comical TV sitcom duo with Social Media Shows Network loves to make you laugh. Mahal Empire Productions, It's a filmmaker based in Las Vegas, Nevada. Founded by Michael and Soniya Mahal, and are dedicated to making feature films. Turn your power on with Broken Bulb Productions. Owned by Russel, an independent filmmaker based out of New Jersey. This show is brought to you by, let's not forget, our very own GI Connections. It's a nonprofit organization that connects veterans with resources. We're also proud to recognize Colorific Arts with Soniya Scott. Painting is the expression of emotion and feeling deep within one's heart. Let's not forget Macoma Environmental Technologies. Global research, development, and manufacturing of innovative photocatalytic products. Our show is also brought to you by Carmelo Rodriguez, who is the author of a best-selling book called Smile. It's based on true events. It's the story of a couple building a family. Get your copy of his book at Amazon today. We also love our musicians. Think about Frank's Tribute, an all-star band. It's a Green Bay-based band with Let Me Be Frank's Productions, family owned by Frank Hermans, who happens to be a veteran entertainer.